All right, guys, huge news out of crypto today. Grayscale winning in court versus the SEC, appealing the decision for them not to approve the Grayscale Bitcoin Trust conversion to exchange-traded product. And I think this is a big win for not only Grayscale GBTC holders, but Bitcoin in general. We're sort of in the summer doldrums right now, and hopefully this will sort of spark the industry. I think this could bring in billions and billions of dollars into the crypto industry. We're sort of in the middle of our cycle, moving towards the halvening next spring, and right now things are pretty quiet on the crypto front. So this was big news today. Not sure if everybody caught it, so just want to go over a few things about the ruling that I looked at on the court documents, and then we'll look at a few other things like the discount to NAV for the GBTC and how that'll work if that exchange-traded product gets approved. Public record. Didn't have any special privilege to get this, of course. You can see here, this is Grayscale Investment LLC versus the Securities Exchange Commission. This is a 21-page document. Basically, if you want to look at it, read it in full, you can. But effectively, it goes through the reasonings for why the SEC initially declined the conversion, and then Grayscale's evidence to support why it should be converted to an ETP, and effectively the court ruled that the SEC didn't prove any reasoning behind their arguments for why the exchange traded product was denied. Noting here, over the last several years, the commission received numerous proposals to list Bitcoin investment products on national exchanges, and they've denied every proposal. The interesting part here is that the Bitcoin futures ETPs is what they talk about a lot, and how those got approved. And they talk about how those were listed with a sharing agreement with the CME, and how the commission found satisfied the significant market test, right? So we'll talk about that a little bit. So here they're mentioning Grayscale currently owns 3.4% of the outstanding Bitcoin, worth tens of billions of dollars. If it traded on an exchange, it would be worth roughly the value of the assets of the trust. So right now you have a discount to net asset value because you're not having redemptions, so you're not able to maintain the product pricing to the net asset value of the underlying assets. And because of that, a lot of people have been underwater for the last couple of years, particularly when they bought if it was in a premium. So if we look here, this is the Y charts showing the discount to premium or discount to, premium to NAV or discount to NAV of GBTC. So you can see early on, and we're going back 5 years here, it was trading at a premium. So meaning people were buying a lot of GBTC. It was outperforming the Bitcoin spot market. And then we get into 2021, and that's when we see that this starts to drop off. And so basically, if there's not as much favorability for this type of product, it's got higher fees. And if we're in a weaker Bitcoin crypto market in general, then that can fall off. And so here we saw this massive drop off as Bitcoin price fell, and it actually bottomed around minus 49%. So it's pretty crazy. This chart's only as up to date as yesterday, so this is before the news, and we see that it was negative 24.89% heading into this ruling today. They explain here a little bit that Grayscale explains it cannot offer the continuous share redemptions and creations that are permissible for ETPs and add enormous value. So per Grayscale, shares trade at a discount, and here they mentioned 30%, but as we see, it's actually been more than that, but leaves out over $4 billion on the table for investors. So here they talk about how Grayscale, they have this argument that was straightforward, and the commission, which is the SEC, acted arbitrarily and capriciously to deny the listing of the proposed ETP but at the same time approved listings of materially similar Bitcoin futures ETPs. Here they say if we find that Grayscale is similar to the Bitcoin future ETPs across the relevant regulatory factors, then we must determine whether the Commission provided an adequate explanation for approving the Bitcoin future ETPs but denying the spot Bitcoin Grayscale ETP. Here we see that Grayscale presented uncontested evidence that there is a 99.9% correlation between Bitcoin spot market and the CME future contract prices. So they're basically saying where the SEC was concerned about fraudulent activity or price manipulation on the spot market, what they're saying here is that the risk for the futures contracts often comes from the spot market prices anyways, and they even say here Bitcoin futures prices are ultimately based on spot market prices. And in addition to that, they say the listing exchanges for Grayscale and the Bitcoin futures ETPs have identical surveillance sharing agreements with the CME. So they basically have this same oversight and surveillance that the futures Bitcoin ETFs have. And here it says, because the spot and future markets are highly related, it stands to reason that manipulation in either market will affect the price of Bitcoin futures. So you're talking about, okay, well, futures are safer, but realistically, if the spot market gets taken out, then the price of the futures are going to drop too. So again, it defeats the purpose of their argument. And here they say Grayscale has demonstrated its proposed Bitcoin ETP is materially similar across relevant regulatory factors to the approved Bitcoin futures ETPs. And they say first in the underlying assets, which is Bitcoin and Bitcoin futures, are closely correlated. And second, the surveillance sharing agreement with the CME are identical and should have the same likelihood of detecting fraudulent or manipulative conduct in the market for Bitcoin and Bitcoin futures. And they say despite these salient similarities, Commission rejected it, but approved the futures ETP. So even the court's saying like, well, this doesn't make any sense. So then they say the Commission distinguished the two products through the application of the market test. So then here's where they talk a little bit about this market test, which is sort of the second factor that they're looking at. The Commission will consider whether a person attempting to manipulate an exchange-traded product could simply bypass the related market and thus circumvent the surveillance. So that would be like if you can affect that Bitcoin ETF without actually buying any of the ETF shares. And then the second is that this is kind of the thing that came up, is that are they trading, would that ETF have predominant influence on the price of the underlying spot commodity? And like the SEC saying, well, for the futures, could it be manipulated outside of the future contract? And the SEC says, well, it doesn't matter because they're not actually holding the underlying, they're just holding the futures. Well, how does that make any sense? And here the court actually said the Commission failed to provide the necessary reasonable and coherent explanation for its inconsistent treatment of similar products. It never explained why Grayscale owning Bitcoin rather than Bitcoin futures affects the CME's ability to detect fraud. While the Commission asserted that owning assets not traded on surveilled exchange was a significant difference, and proclaimed that there was a reason to question whether a surveillance sharing agreement with the CME would in fact assist in detecting and deterring fraudulent and manipulative misconduct affecting the price of the spot Bitcoin held by the ETF, there's no support for these claims. So basically, the SEC is making stuff up at this point. And then they even say Grayscale did provide evidence that CME Bitcoin future prices are 99.9% correlated with spot market prices. So based on that data, fraud in the spot market would present identical problems for both the spot and futures exchange-traded products. So again, basically the court's just saying the SEC has no evidence to support their claims or reasoning why they wouldn't approve a spot ETF but would approve a futures ETF. And even here, now they're saying like the commission, which is the SEC, they keep referring to the commission, even acknowledged the risk of fraud to Bitcoin futures from trading outside the CME Bitcoin futures market when they filed for these. So, I mean, they kind of go into that a little bit more. And again, you know, if you want to read the whole thing, go ahead. I'm just sort of giving you some tidbits here. Okay, so now we're in the kind of the final piece. This is the second prong of the significant market test. So basically, the commission concluded there was a risk that trading in the Grayscale would be the predominant influence on price. So they're so worried about Grayscale becoming an ETF that it's going to impact directly, have control over the price of Bitcoin. But remember, they own about 3.5% of all Bitcoin. And the court says they failed to explain how this would happen. Their primary argument was that Grayscale had $30 billion in assets, and this might dwarf the CME market for Bitcoin futures, which only had 1.7 billion of open contracts. And they expressed concern about the trading volume between Grayscale and the CME Bitcoin futures market. The commission, however, again, the court states, did not adequately connect the value of Grayscale's assets to the conclusion that those assets would influence price in the CME future market. Grayscale owns no future contracts. Trading in Grayscale can affect futures market only through the spot market. Now they look at, okay, well, how much would Grayscale actually affect the spot market? Well, they say here, they did a comparison that showed that while Grayscale experienced nearly 7 billion of inflows over a 2-year period, the market capitalization of Bitcoin grew by 721 billion. So basically, they had a 1% effect on the overall market cap. So the evidence suggested it's unlikely to dominate prices because the spot market was huge and growing faster than Grayscale. So it's basically saying the SEC must be consistent and predictable, following the basic principles that similar cases should be treated similarly. NYSE ARCA presented substantial evidence that Grayscale is similar across the relevant regulatory factors to Bitcoin future ETPs. Commission failed to adequately explain why it approved the listing of the 2 Bitcoin futures ETPs but not the spot ETF. In the absence of a coherent explanation, this unlike regulatory treatment of like products is unlawful. Therefore, we grant Grayscale's petition for review and vacate the commission's order. So Jake Chervinsky, this guy apparently is a lawyer. Obviously, this tweet got quite a lot of views, but keep in mind this doesn't approve the ETF. Okay, the SEC still has to approve the ETF. So he says there's a few things they can do, and I agree with this. They like soundly rejected the view. It was like not even close. If you read through the whole thing, you get a sense for the language they use and kind of the way that resonates through the whole document. So here's where he says, what will they do? So one theory is that the SEC will just pick a different reason to deny the proposal. Then we probably go back to court, go through a whole new litigation process, and that would just be painful. Another theory is that they, kind of bite the bullet here and they just let it go and let it happen, approve it. He mentions here there's going to be some political pressure on there too. Obviously, there's BlackRock coming up. You have a lot of big TradeFi companies that have wanted to get in this market. And let's be honest, Gary Gensler is not in very many people's good books right now. So this is a Bloomberg piece here that says the SEC said it's reviewing the court's decision, and they have 45 days to ask a full slate of judges on the D.C. Circuit Court of Appeals, which honestly, if you're looking at how the court determined the outcome of this case, I would highly doubt there'd be a different outcome there. versus the 3-judge panel. Otherwise, it could petition the Supreme Court, and that would obviously blow up and go big time mainstream and everything else. So we already looked at the discount to NAV, and here, we look at the Bitcoin price, obviously with a nice candle today, up about 6%. We just got back above the 200-day moving average, and we were playing fire here with this sort of horizontal support line, which is kind of around the 25,300 level. And I've heard a lot of people online looking kind of at that 28.5 level as a big support, and that sort of correlates with the 50-day moving average. So we'll see how much pumpage this has. But looking back out at how Bitcoin's performed year to date so far, right now we're up 66% and change on Bitcoin for the year. But what's interesting is Grayscale, so with this lawsuit and everything, it's sort of been closing that discount, which sort of peaked down here in December, so kind of right around when the new year started, and outperformed by quite a lot so far this year. It's up 148%. All right, so basically, summarize everything. Positive for Grayscale today, beating the SEC. We'll see how the SEC reacts to this, whether it's now or a year or two from now. I think these ETFs are going to happen. BlackRock decisions coming out this week likely is going to get delayed like everything else. But I do think this puts some momentum back in crypto's favor. Hopefully this sort of dissociates it a little bit from the traditional markets, especially like the NASDAQ and the triple Qs. And we'll see as we sort of roll into the fall, into the spring next year, into the halvening of 24, where Bitcoin goes. But this is probably the most exciting news we've had in a long time.